Can I just open up this video with a question to you specifically? What is your absolute favorite way to make money? Because for me personally, and there's got to be other people out there that think similarly, the all-time favorite way that I have to generate any type of income is through investing. Now that is whether it's being paid dividends or getting capital gains from my stocks. I just love making money from investing because I feel like for me, it's putting in minimal effort and getting maximum results. I don't really care as much about my paycheck. Obviously, that's what feeds into the account. It's just so rewarding to have recurring investments that are going to be producing you income for the future. Now, let me know if you guys think along the same way. And hey, if you're new to this channel, my name is Dalton and you are on Delitz TV here. We talk about all things investing with my tips, tricks, and insight into the stock market. So if that's something that interests you, you're looking to increase the size of your portfolio, you've come to the right place. Make sure you quickly jump down, click that subscribe button, and turn on the bell notification. You're definitely not going to want to miss the videos that I have been posting. Now, in this one here today, specifically what we're going to be talking about is how to increase the size of your investment portfolio. Basically, what I like to do, what I use is the Robinhood investing app. So I'm going to be focusing on how to grow your portfolio using Robinhood investing, but really it translates to all brokerages. No matter where you're investing, it's going to be the same principles. And there are 5 main things that I typically do when it comes to my investing that has allowed me to maximize my results. So let's talk about those. Now, let me let you in on a little secret right off the bat. When it comes to investing, what you want to do, put all your money into Tesla, put it all in call options. Tomorrow, you're going to wake up a millionaire. Actually, that leads me to my very first point, and obviously you don't want to do any of that. That leads me to my first point though, which is investing is not a get rich quick scheme. It's going to take a long time, a lot of practice, and you are going to have some downfalls when it comes to investing because that's just part of the learning process. You're not always going to have a winning track record, and you need to be willing to put in the time to invest. Now, if you start younger, today is the absolute best time for you to start investing. If you have no high interest debt, meaning you don't have these high interest, things that are overweighing on you, car payments, credit card debts, these things are all taken care of, then it is a really solid time for you to start investing because you're not going to get any younger. And you're going to see the greatest return the longer that you can hold your money into the market, so long as you're making sound investment decisions and you're investing in the right companies. For me, for example, I love long-term investing. I am a dividend investor, so I focus primarily on these well-established companies. Typically, I'm looking at dividend kings, dividend aristocrats, and if you don't know what that is, dividend kings have been increasing their dividend payments for 50 plus consecutive years, and dividend aristocrats have been increasing them for 25 plus consecutive years. Proven track records, really, really great financial backing, stats, everything. And if you look at my investment portfolio, you're going to realize that most of the investments you have heard of. The riskiest one that I actually do hold, and ironic that I mentioned at the beginning of the video, it's actually Tesla, where I hold 2 shares that I bought after the stock split. And we'll talk a little bit about that in a few minutes here. But what I really want to drill down is there are so many people out there, so many internet gurus, investing gurus that are going to teach you how to day trade, swing trade penny stocks. It is so hard to do this on a consistent basis. And although some people have done it in the past, it is very, very much overwhelming if you don't have all the time to dedicate into learning how to trade on the highest caliber level. And most people are not going to be able to do it, and likely you're going to fail. Take my advice. I tried to do it. I tried to day trade. And I'm relatively, I can pick up things pretty quick. And honestly, I did not have the time to fulfill it. And it ended up not working out, and it really hurt me more than it helped me in terms of accumulating wealth, accumulating money, and generating more income. All right, now let me just open up my Robinhood investing app to show you exactly what I'm talking about. So this is my portfolio overview right here. Over the past day, we were able to manage $184.20. Over the past week, we're looking at $143.56. Over the past month, really, really stagnant, 0% gain, 30 cents, it is what it is. 3 months, we're looking at $555.41. And over the past year, with everything that's gone on with COVID, with supply chain disruption, so much has affected the stock market. We're looking at a 3.84% gain. And honestly, you can see at times we were down pretty far, and it leads into some other points that I have here on my list. But let me just show you some of the stuff stocks that I'm investing in case you were wondering, you're going to realize you're going to know a lot of these names. SPHD is an ETF, high dividend, low volatility ETF, very, very safe. I got a question recently, am I worried about the expense ratio in SPHD? And the reason why I'm actually not worried about it is because it is a very actively managed fund. They reallocate, they balance every year. They make sure that it is going to be a very, risk averse investment. So I'm not one that likes to see my portfolio value fluctuate by huge percentages on a daily basis. So investing in an ETF like SPHD, having most of your holdings in here, you're not going to see the greatest returns. There's definitely other ETFs that might provide a better return for you. But SPHD, in times of economic downturn, when you're questioning the market, you're not going to lose as much money investing in an ETF like this. That is my rationale behind it. That's why I invest in it. And that is a really great question. So I'm glad that you asked that. Next is Realty Income, monthly dividend paying company. It's a real estate investment trust. Really, really great. And then obviously Tesla, Johnson & Johnson, Apple, Coca-Cola, AT&T, Microsoft. I'm sure you've heard of all these. My total stock market index tracker is VTI, Vanguard's total market tracker. It's a really, really great one. If you want to learn about that, I'd definitely look at some of their historical returns. It's looking at, 8-9% year over year. Really great stuff. McDonald's, Pfizer, Amazon, Citigroup, AbbVie, Ford, and Activision was one that I picked up recently. So pretty good balance in my mind, a heavy weight in that ETF there, which is diversified in itself. But that's exactly what you're looking at for my portfolio. It just kind of backs, I'm looking at some pretty common stocks that most people know. So looking at my portfolio overall, what I've been doing and leading into my number 2 tip is going to be invest over time. It's not something you want to just put a ton of money into right away and let it sit there unless you're talking about investing millions of dollars at one time. I mean, it's really not going to make that much of a difference. What I personally have been doing is investing $100 every single week into the stock market. I report on this channel everything that goes on through the Robinhood challenge. And if you want to see how I grew my portfolio to be worth $8,285 starting from zero, I have charted the entire journey on my YouTube channel. You can go back. You're more than welcome to check out any of the videos that I have on here. And if you have any questions along the way, leave them down in the comment section on any of the videos and I'll be sure to get back to you. I really take it personally when people are asking me questions. It's really great for me to, brush up not only on my own knowledge to answer the questions, but answer those questions for any type of investor, because a lot of people who are on this channel watching might not have all the information. They might not be the most keen when it comes to investing, and they might have some rather what they consider basic questions. But I guarantee if you're thinking of a question, there's got to be at least 5 or 6 other people that are watching that have the very same question. So don't hesitate. Be sure to ask anything in the comment section and I'll be sure to get back to you. Now, as I said, investing over time is critical. It does take money to make money, okay? You're going to earn more money if you are able to put more money in investing. And what I look to do in the future is take my $100 value every week and up it when possible. Now that's going to be when I get like raises at work, or if I get, any pay bump really. If I get a bonus, I might invest it there. There's a number of options that you can do to increase your amount you're contributing to your portfolio. And that's what I look to do in the future. But that is the number 2 tip that I have for you guys. The number 3 tip, and this is one that I've really practiced a lot this year, is not panic selling. Okay. So you can see my stock portfolio was down earlier about 16%. If not, it was more than that, probably in the 20% range. And I could have, freaked out, sold a lot of my stocks, taken the loss, but I just knew timing was the biggest impact on this situation here because of COVID, because of everything going on. I knew panic selling was not going to be a good decision and holding it is going to benefit me. Really, I mean, I held, and it hasn't even been that long. So you can see when it was down that much, that was in March. And you can see now that it's only been a few months and we've fully recovered and made some money on top of that. Now, when I talk about holding though, I'm not talking about, just a matter of a few months. This particular portfolio, the one here, is going to be one that I hold for pretty much the duration of my life. I look to have this sitting in this account, accumulating money, and then as I get older and maybe I approach retirement, I'll start cycling through, maybe take some of this out. But really, for now, this is one that I'm aiming to hold for the duration of my life. I don't really have any plans of withdrawing this money. For now, it's just going to be adding onto it and trying to accumulate as much wealth as I possibly can. So panic selling, easier said than done. I just urge you, if you're making those sound investments, you really don't need to worry about it, especially if you're young, like a 23-year-old investor, for example. I have so many years ahead of me to make back that money. And it's easier to be more risky when you're younger. So that's why I love it. Now, something else I want to talk about is to not be overly shy when it comes to investing. So I remember, for example, if I drill into Microsoft is one that I really, really love. And I was up a very high percentage on them. Right now I'm up around 24%, but I was up, 50% on one of my investments. And even when I had invested, in the, I believe, let me drill into the history here so I can pinpoint exactly the price of it. But I remember people were like, why are you investing in Microsoft while it's so high? And it was at all-time highs when I invested in it. So I invested back when it was looking at in 2019 in September, it was $135. And people were commenting and messaging me, why are you investing in a company like this at a price point that is so high? Now you can see it today. It's over $205. At that point, I obviously should have invested more, and I really just blocked out what everyone was saying. It was a company that I have known and loved, one that I looked up, was looking at their financials, and I really felt genuinely that they were undervalued at the time, and that's why I wanted to make an investment. Now, obviously, it worked out for me so far, and honestly, I started investing as it got higher too. So now I've drove my cost up a little bit, but right now we're sitting pretty nice with an investment like this. So really, don't be shy when it comes to investing. If it seems like, things are really, really high and you're thinking in your mind, it's only going to crash from here, just take a step back, look at the facts, look at what's going on, read the financials, get some input from people, read what the analysts say. There's so much you can do to back your position and figure out if the investment is right for you. Now, on the opposite end of that, which leads me to my next tip, is going to be don't be overly confident with your investments. So, for example, one that I have been, overly confident in, and mainly it's because I believe there's so much future potential for this stock, that is Tesla. As soon as Tesla had its stock split, that's when I decided to invest in Tesla. And you can see right now, if I scroll down, we're down around 9%, and it's only been a few days. So I'm practicing, not only I'm trying not to panic sell this stock because it was down close to 20%, but also I'm just looking to hold on and not be overly confident. I really believe there's a lot of future potential, but at the same time, Tesla only recently started going positive on its balance sheet, so you never know where a company like that is going to end up. I personally believe that with electric vehicles, alternative energy, and what innovative products Tesla will offer in the future, I think it's going to make up for it personally. Obviously, when you invest, don't just blindly copy someone on the internet like myself. You're going to want to do your own research. But for a company like Tesla, it's one I truly believe in, one that I think has a lot of value. And though $421 now, even though I invested closer to $500, it seems like it is really expensive. And I know it's expensive, but I just know in the future, my own personal beliefs, I think this stock is going to be a lot higher. So that's why I really like investing in Tesla. Just a few more tips when it comes to investing: understanding your risk tolerance, knowing what type of investor you want to be, having a goal set. There's so many factors that go into growing a portfolio and making money. I think that it's overlooked often when you're structuring your portfolio. Your goals, all of that stuff kind of goes over the top of mind of new investors. They really just jump in, think they're going to make money quick, and then they get discouraged by the results. But I promise you, if you guys are like me, if you guys have sound investments, if you think bigger picture, further out, make some really great sound investments, you're going to do well for yourself and you're going to be very satisfied. As I said at the beginning of the video, I really love getting dividend payments, making money from my investments. There's nothing more rewarding. I don't think so. When it comes to making money, I don't think there's anything more rewarding than that. Let me know your thoughts around that in the comment section down below. If you made it this far to the video, please, you might as well just slap a like on it. Really does help me out and I would really appreciate it. Anyways, thank you so much for checking out this video. I really do appreciate it, and have a great day.